You've been there. You just watched it happen. A clean, perfect setup, or so you thought, just got obliterated and smashed right through your stop loss. Your heart starts pounding. Your face gets hot. And a voice in your head, like a loud, primal scream, is shouting, "You have to make that money back right now. Get back in there." That impulse, that overwhelming urge to chase the market and punish it for being wrong, has a name. It's called revenge trading, and it is the single biggest account killer in Forex, period. It's not a flaw in your strategy. It's a flaw in your psychology that turns one calculated loss into a catastrophic spiral of emotional decisions. It's the dark side of trading psychology, where logic goes to die and desperation takes over. But what if, in that exact moment of white-hot anger, you had an emergency brake? A clear, 5-step plan that you could execute without even thinking. A plan designed specifically to wrestle control back from your emotional brain and hand it to the logical, process-driven trader you're meant to be. What if you could turn that chaos into long-term, profitable calm? In this video, I'm giving you that exact 5-step plan. This isn't fluffy theory. This is a practical, step-by-step framework that you can, and must, start using today to kill revenge trading for good. Before we get to the plan, we need to stare this enemy right in the face. So what is revenge trading? At its core, it's when you jump into new trades impulsively right after a loss, driven by pure emotion, just to recover the money you lost. It's the moment you toss your trading plan in the trash, ignore your risk management rules, and let anger, frustration, or ego call the shots. You might suddenly find yourself doubling your lot size, trading a pair you haven't even analyzed, or forcing a setup that doesn't meet a single one of your rules. The reason it's so lethal, especially in Forex, is because it creates a devastating feedback loop. You take a loss. You feel that emotional sting. You jump back in with a reckless trade to erase the pain. That trade, since it was unplanned and probably oversized, results in an even bigger loss. Now the pain is twice as bad, the desperation is twice as high, and the cycle repeats until your account is either critically wounded or completely blown. It's like a pilot in a storm who, after one jolt of turbulence, decides to ignore all the instruments and just fly by the seat of his pants. The result is almost always a nosedive straight into the ground. This is especially toxic for two groups: total beginners and intermediate traders managing smaller accounts. If you're a beginner, you just don't have the battle-tested experience to handle the psychological heat of a drawdown. If you're an intermediate trader, maybe with a small personal account or grinding through a prop firm challenge, the pressure is insane. A 2% loss on a $500,000 account is just a number. But on a $500 account, that same loss feels like a personal attack. It feels devastating, and it fuels that intense urgency to win it back before the account is gone. This is where one disciplined loss turns into a cascade of emotional decisions that can get you kicked out of a challenge or wipe out months of hard work in a single afternoon. It's an open secret in this industry. The vast majority of traders don't fail because their strategy is bad. They fail because their psychology crumbles under pressure, and revenge trading is the primary weapon of that self-destruction. So, if we all know revenge trading is bad, why is it so damn hard to resist? Why can't we just take the loss and walk away? Well, the answer is deep in our brain chemistry and a few pesky things called cognitive biases. When you lose a trade, your brain experiences a sudden drop in dopamine, the reward chemical, which literally triggers a sensation of pain. Your brain desperately wants relief, and it thinks the quickest fix is to score another win, fast. This gets amplified by something called an amygdala hijack. Think of your amygdala as the primitive, caveman part of your brain, and it just took over the controls. It floods your system with stress hormones, kicking off a fight-or-flight response. Logic, planning, and rational thought, all jobs of your prefrontal cortex, get shut down. In that moment, you are not a trader. You are a cornered animal, and your only instinct is to fight back against the threat, which in this case is the market. Then your ego gets involved. A losing trade doesn't feel like a statistic, it feels personal. It feels like the market just called you stupid, and your ego is screaming to prove it wrong, right now. This is when you see the classic red flags. You start ignoring your own rules, you yank your stop loss because you just know it'll turn around, or you start firing off random trades. just hoping one of them sticks. Let's imagine a trader we'll call Alex. Alex has a solid plan and a $1,000 account. He risks 1%, just $10 per trade. He takes a trade on Euro, USD that looks perfect. It ticks every box on his checklist. But then, some unexpected news spikes the market, and he stopped out. A $10 loss. Frustration boils over. That wasn't fair, he thinks. The market cheated me. He immediately jumps back in. But this time, he doubles his size to $20, convinced he'll make it back, and then some. This trade, born from anger, has no real setup. It quickly turns against him. Now he's down $30. Panic sets in. He doubles down again, now risking $40 on a wild guess. Within an hour, that single, disciplined $10 loss has morphed into a $150 emotional catastrophe, wiping out 15% of his account. Sound familiar? This isn't rare. This is the reality for thousands of traders every single day. The urge to undo the loss becomes so powerful, it overrides all logic. The solution isn't to just try harder to be disciplined. The solution is to have a rigid, non-negotiable protocol you execute the second a loss hits. The 5-step discipline plan. This is the core of this video. This 5-step plan is your emergency eject button. It's a structured routine you must follow immediately after a losing trade to break the emotional cycle and stop the bleeding. It's simple, it's actionable, and you can do it in under 20 minutes. Step 1. Acknowledge and pause. The very instant your stop loss gets hit and you feel that rush of anger, your first move is not to look for another trade. It is to acknowledge the feeling and physically close your trading platform. Do it immediately. Don't just minimize the window. Shut it down. If you trade on your phone, close the app. You need to create an immediate pattern interrupt. You're severing the connection between the emotional trigger, the loss, and the destructive action, placing another trade. As you do this, say it out loud. I feel angry, and I have the urge to revenge trade. Naming the emotion is powerful. It actually starts to activate your prefrontal cortex, the logical part of your brain, and begins pulling you out of that emotional hijack. It's a simple act of self-awareness. You're forcing yourself to recognize you're in a compromised state, and professionals don't make decisions when they're compromised. This step isn't about crushing the emotion. It's about seeing it for what it is and refusing to act on it. You're creating a tiny bit of space between the stimulus and your response. That space is where discipline is born. You've stopped the impulse in its tracks. Now for the next step, you step away and reset. Platform's closed. Now, you need to physically remove yourself from your trading desk. Stand up. Walk away. This is non-negotiable. Don't linger and stare at charts on another screen. Don't grab your phone to check market news. You have to create physical and mental distance. Your goal for these 10 to 15 minutes is a physiological reset. You need to lower your heart rate and get the stress hormones out of your system. Here are a few things that actually work. Go for a brisk walk. Just moving your body helps burn off stress hormones. Practice box breathing. Inhale for 4 seconds, hold for 4, exhale for 4, hold for 4. This is a technique elite performers use to calm their nervous system. Get a glass of water or make a cup of tea. A simple, mindful task can break your fixation on the loss. Listen to a couple of songs, something that has absolutely nothing to do with trading or motivation. The goal here is distraction, not hype. During this time, you are forbidden from thinking about the trade. Don't analyze what went wrong. Don't plan your next move. You are focused entirely on letting your emotional baseline return to normal. You can't analyze anything objectively while your body is still in fight or flight mode. Step 3. Review limits and journal. After your 10 to 15-minute reset, and only when you feel genuinely calm, you can return to your desk. But you are not opening your trading platform. You are opening your trading journal. First thing, check your daily and weekly loss limits. Have you hit them? Most pros have a hard stop rule, like a max loss of 2% a day or 3 consecutive losing trades. If you've hit your limit, your day is over. Period. No exceptions. Enforcing this rule is the ultimate act of discipline. The market will be here tomorrow. Your capital won't be if you break this rule. Next, you're going to journal the trade you just lost. Log the details objectively. Pair, entry, stop loss, and the reason you took the trade based on your plan. Then, here's the most important part. Log your emotional state. Write down exactly how you felt when you lost. And ask yourself the critical question: did this trade align perfectly with every single rule in my trading plan? Be brutally honest. This process turns a painful, emotional event into a data point. It forces accountability. Instead of blaming the market, you're analyzing your process. Was it a good trade that just didn't work out? Or did you bend a rule? By reviewing the trade against your plan, you reinforce that the process is what matters, not the outcome of any single trade. Step 4. Reaffirm your plan and risk rules. Your journal is still open. Now, I want you to open your trading plan document. If you don't have one written down, this is your universe-sized wake-up call to make one right now. You are going to read your core rules out loud. Read your entry criteria. Read your exit criteria. And most importantly, read your risk management rules aloud. I will risk no more than 1% of my account on any single trade. I will always use a stop loss. I will not move my stop loss to save a losing trade. This act of verbal affirmation grounds you in logic. It's a conscious reminder of the professional you've decided to be. It's you telling your brain, these are the rules. This is the system I trust. My long-term success depends on this, not on whatever just happened. Also, review your pre-trade checklist. Look at what defines a high-probability A+ setup for your strategy. This recalibrates your mind to focus on quality, not quantity. It reminds you that your job is not to just trade, but to wait patiently for the market to give you a real edge. Deviating from that edge isn't trading, it's gambling. Reaffirming your plan is like a pilot running their pre-flight checklist. It ensures you're operating from structure and safety, not impulse. Step 5. Reframe and decide. This is the final step, the moment of decision. And it starts with one last mental shift: reframing. You must view the loss not as a personal failure, but as a necessary business expense. A bakery buys flour. A store pays for inventory. A professional trader pays for losing trades. They are an unavoidable cost of doing business in a world of probabilities. Remind yourself that your edge doesn't play out over 1 or 2 trades. It plays out over hundreds. This single loss is statistically irrelevant in the grand scheme of your career. Detach your self-worth from the outcome. Winning or losing a trade doesn't make you a good or bad person. Executing your plan flawlessly is what makes you a good trader. Now, you make a decision. Ask yourself with total honesty: am I calm? Am I emotionally neutral? Have I hit my daily loss limit? If the answer to any of these is no, you shut it down for the day. Close the journal, turn off the computer, and be proud of the professional discipline you just demonstrated. Walking away is a winning decision. If, and only if, you are calm, you are within your risk limits, and the market presents another A+ setup that meets every single rule in your plan, then you are permitted to resume trading. You are no longer acting from a place of revenge. You're acting from a place of discipline, process, and control. I have a challenge for you. This plan only works if you commit to it before you need it. So right now, I want you to write these 5 steps on a sticky note and put it on your monitor. The next time you take a loss, I challenge you to execute this 5-step plan without hesitation. Don't just think about it, do it. Then, come back to this video and let me know in the comments how it felt. Did it stop the emotional spiral? Sharing your experience won't just solidify your own discipline. It will help every other trader in this community who's fighting the exact same battle. And if you're serious about mastering your trading psychology and finally becoming a consistently profitable trader, make sure you subscribe and hit that notification bell. I release videos every week with the practical tools and mindset shifts you need to win this game. Forget a quick recap. Let's talk about the lessons that will actually save your trading career. First, your real edge isn't your strategy. It's your discipline in the face of chaos. Any decent strategy can work, but it's worthless if your psychology crumbles under pressure. The market doesn't reward the best system. It rewards the best execution of a system over time. Second, a loss is a business expense, not a personal failure. The market is not attacking you. It's an impersonal field of probabilities. You have to detach your ego and self-worth from the outcome of any single trade. Your job isn't to be right. It's to manage risk and follow your plan. Third, you cannot make logical decisions from an emotional state. It is a biological impossibility. When your heart is pounding and your face is hot, your rational brain is offline. Recognizing this isn't a weakness, it's a professional awareness. Having a non-negotiable protocol to reset is the mark of a pro. And finally, in the heat of the moment, your trading plan is your only North Star. It's the contract you made with your future self when you were calm, objective, and rational. Trusting that plan is how you bridge the gap between emotional impulse and professional consistency. You are not defined by your last trade. Your success will be defined by your discipline in these chaotic moments. Master your response to loss, and you will master this game.